Good morning. This is Bob Meath, and with me this morning is Carrie Meath-Sinkin with Meath Wealth Advisors, and we are recording this like last Sunday morning, only this time it's April 5th. We are doing this from our home offices, so you'll notice it's a little bit different in sound when I talk and when Carrie talks. But this morning we thought it would be helpful to go through the CARE Act in a little bit more detail on how it affects your planning. Last week we spent some time, most of the time on the coronavirus situation and some planning opportunities that arise out of that. But first of all, kind of giving you an update what had happened, but also looking at some planning ideas that we're looking at. This week, and we just mentioned the CARE Act briefly. So this week we know more about the CARE Act. We've had a week to look at some planning situations. We've certainly been on a lot of calls with people and planners and looking at the things that are most relevant for individual planning and for small business planning as well. So this morning we thought it'd be helpful to go through that. Like last week, Carrie's going to go through the overview of the Act and discuss, what are the most important points, and then I'll come in at the end again to talk about some planning opportunities. We'll end it up together. So go ahead, Carrie.
Good morning. I hope this finds you all well. Today we're really going to spend time going through an overview of the Act and the biggest planning pieces that impact you, and then we'll wrap it up similar to our last presentation, just going through, more detail on the strategies. So as we start out, kind of what are the biggest pieces of the CARES Act that are really important for you to know? And this may be, for those of you who are staying up to date, a little bit of review, but what we know is that the CARES Act is about a $2 trillion relief effort designed to help in a few key areas. It's designed to help individuals by giving direct payments to individuals. That's about $250 billion of the plan. We have about $350 billion designed for small business loans to help smaller companies stay in a good situation for themselves. We have about $250 billion in unemployment insurance benefits, $500 billion in loans for distressed companies, and then finally about $650 billion in other tax relief. So as we go through this, we're going to talk about the key areas of this that really specifically affect you and how you can think about that. The first one is around the individual payments. So what we know here is that for individuals making less than $75,000 in their adjusted gross income, they will qualify for a $1,200 payment, with a phase-out coming at about $99,000 without children. If for those couples who are married and filing jointly, it'll be $150,000 of adjusted gross income and then double the payment. So $2,400 in payments for that couple, with an additional $500 per child under the age of 17. And what happens when you make above that $150,000 is that it's phased out $5 per every $100 of additional income. So that final phase out comes at about $198,000 without children. It goes a little bit higher with that amount. So the key pieces to keep in mind as we're looking at that is that it's going to be based on kind of 2020 income, but the Treasury and the calculations are actually, they're going to look at your 2018 or 2019 tax return. And the key piece to keep in mind here is that if you can kind of play with which year you made less income and therefore would qualify for a greater payment. So for example, if you have not filed your 2019 taxes and you made more in 2019 than you did in 2018, then you may want to delay filing for another few months until you receive that check so that you do get a slightly larger amount. So again, looking at kind of the dates of your filing is kind of an important piece to keep in mind here. A few other key pieces on this is the rebates are not going to be taxable and there's going to be no clawback provisions. So that means once they give you that check, there aren't going to be additional changes that happen after that. So again, the key piece here is if you haven't filed for 2019 yet and you made more than 2018, maybe consider delaying your filing just a little bit longer to increase that payment that you get. But this is a payment that's going to happen regardless of what you do. It's just going to take into account kind of your filing time frame as far as the amount that you're gonna get. Another key piece to keep in mind here is if you do have electronic records on file, it's going to be something deposited directly into your bank account. If you do not, then it's going to be a check that's sent, which is going to take a little bit longer to finally get to you. So that's the first really key piece here, is that individual payment that you will receive if, as a married couple, you made less than about $198,000. Another key piece here is a unemployment check that you could receive. So this is going to be $600 a week for 4 months, totaling about $10,000 that you would qualify for with your unemployment filing. And the Fed has predicted about 30% of the population filing for unemployment. And obviously we saw even in this last week, there was a sharp increase in unemployment filings, potentially partially related to the amount that you will receive if you are unemployed. So that's another kind of key piece of this, is just that additional amount that you will receive if you are unemployed and have filed for unemployment, that $600 per week.
And Carrie, that's on top of your that's on top of your unemployment check that you get from the state, so it's an extra $600.
Exactly. So that's something significant if you have been really heavily impacted by this, or people who have, encouraging them to think about if filing for unemployment does make sense for them. Another piece to this, in addition to that individual check and the unemployment that you can file for, is something specifically designed for small businesses. So there were disaster relief loans in place prior to the CARES Act, but they've become significantly more appealing through the CARES Act. So the key pieces you want to keep in mind, this is being called the Payment Protection Act. It's 100% federally guaranteed loans. The turnaround is expected to be very quick. So once you file, it's expected that you'll receive this within 1 to 2 weeks. And the reason for that, obviously, is they want to get it into the hands of people who need it as soon as possible. Another key piece of this is that it will be forgiven if borrowers, so this is the small business owners, maintain their payrolls during this time period. And that's really part of the design of this loan, is they want to keep the people that are working in small businesses in a good situation, as well as the small business, so that when the coronavirus it does start to turn around, businesses are in a better position. So there's some details as far as what you need to satisfy in order to qualify for these loans. And we're not going to go into that in detail because we have been in touch with those of you who do have small businesses, and we know you're on top of this. But these are really designed for companies with 500 or less employees, sole props, independent contractors, and people who are self-employed, who carry on a trade or business. That's sort of the people who qualify for the small business loan. And there's going to be typical lenders. Most banks are going to be approved for this, and they're looking for specific pieces in their lending. But the form itself is relatively simple to look at. There's going to be a little more documentation required as far as having that forgiven, which is going to take a little bit of additional time. But the basic idea is that you can get 2.5 times, your average monthly payroll costs, again, not exceeding $10 million. And there's some specific calculations here that you can keep in mind. Any additions on that, Bob?
No, I think so. That, as you said, Carrie, the small business owners that we have as clients, we've been in contact, and for the most part, they have all contacted their bankers and are working on that. So I think that and there's more slides here that go into more detail on that if people want to review those. But I think we're good on that for the purposes of this morning.
And the key piece to keep in mind just before we wrap this piece up is that, we're not going to have forgiveness across the board. So there are some specific pieces that you're going to have to qualify for in order to have that forgiven. So here's just some high level. But the borrower eligible for loan forgiveness is going to be based on the amount spent during the 8-week period following the date of the loan origination. And it's going to cover key pieces like payroll costs, interest on mortgage obligations, rent or lease agreements, payments on utilities, and some other pieces here. But that's really what's going to be forgiven. So for those of you who do know others, keep in mind you can get the loan relatively easily. You just want to make sure that you're putting everything in the right situation as far as making sure you're in a good position to have that loan be forgiven later on. And this is just some documentation that is needed for the forgiveness aspect. And again, we're not going to go into that in too much detail. There's also economic injury loans. These are very short term, up to $10,000. And that's kind of part of this process, but it is supposed to be a little bit quicker. But again, we're not going to go into that in detail because that doesn't impact most of you, just being aware that it's out there if it might apply. Another key piece for small businesses, just high level, to understand that there is going to be some employee retention credits, specifically looking at, those a fundable credit for employers' share of the 6.2 Social Security tax and some other key pieces there. Again, all of this really designed to keep small businesses in, afloat during this difficult time so they can be in good shape moving forward.
Like I said last week, Carrie, I think this whole Relief Act is really, along with what the Fed is doing, is just to kind of put the economy in suspended animation, so keep things the way they were as much as we can, realizing that you can't do it totally, but by providing all these benefits, tax relief, tax and payments, that it just kind of keeps the economy in a state of suspended animation.
Yeah. And so there are, like we've seen historically, there are some larger corporate bailouts as well for, airline companies, freight companies, healthcare. There's a large chunk going to this. So just understanding that is built in there. But probably one of the biggest pieces to understand if you're in retirement or looking for additional money and potentially needing to pull from IRAs is the big provisions that were put in place on the retirement plan and some tax changes. So as most of you are probably aware, your 2019 taxes are now due by July 15th, 2020. This includes IRA and HSA contributions. So make sure that you're aware of that and taking advantage of it if it makes sense for you. Specifically, as we think about the 2020 retirement relief, what we know is that there's going to be no RMDs owed in 2020. This is a very big deal. So for those of you who are taking RMDs, they are not going to be owed in 2020. This includes inherited IRAs, and for those who have kind of a 5-year rule, that is actually going to be increased an additional year. So this is a very big deal. For those of you who are taking, RMDs from your annuities, you probably want to continue that cash flow. But for those of you who are taking additional annual monthly amounts that you do not want to continue, please get in touch with us as soon as possible, because that's not going to be, your RMD will not be required this year. Another piece is there's going to be larger loan provisions available from from IRAs. So for those of you who need to pull from an IRA, there's going to be no 10% penalty on distributions up to $100,000 from IRAs. A few key pieces on this is that will be allowed to be repaid over the next 3 years, and it will automatically be spread over those 3 years unless you opt to have it be treated specifically in 2020. But you would want to make sure you understand that piece. And if this doesn't apply to most of you, but if there is anyone who does need to pull from IRAs that you know about, making sure they understand and take advantage of this, and also think through the right strategy that might make sense for them as far as thinking about how they spread their taxes out over the next 3 years, and then the best way to have this repaid over the next 3 years. But those are the really two key pieces when we think about retirement planning: is no RMDs this year, and a waiver of the 10% penalty on distributions up to $100,000 from IRAs.
Hey, Carrie, just a couple things as I look at that slide. One thing, the first bullet you have there is the 2019 taxes are not due until July 15th. And that goes back to what Carrie said earlier on if you want to get the where you can control your income for the payment you'll get from the government. So if you had if you had not filed your 2019 taxes and your income was substantially higher, you have a chance to defer that to July 15th. You can apply for your payment using your July 18 numbers, and that's what Terry was talking about earlier. That date just jumped out at me. I thought I'd just mention that. And the other thing is, on the RMD planning, certainly there's dollars that are being taken out of retirement plans that are there for income, but this just gives us the opportunity. There's a lot of you who would not take those dollars out unless you had that required minimum distribution. So it allows us to not do that this year. And the reason they did that, obviously, is if your account values are down and you take out, as you know, the RMD is based on your December 31st values in your accounts. So that's December 31st of 2019. Now you're taking RMDs out, and your account values in many cases are smaller, so it becomes a big percentage of your IRAs. So they don't want that to be drawn down quickly, so we can, once again, by deferring that till next year, the idea is the account values will come back, and then as we look at it in at the end of 2020, your RMD will be based on that number for 2021. I just wanted to amplify those two things, Carrie, but go ahead now.
Yep. And one other key piece here is if you have already taken an RMD, there is one, if it occurred within the last 60 days, you are eligible for a 60-day IRA rollover. So that would be contributing it back into the IRA and therefore not needing to count it as an RMD. So that's another piece just to keep in mind, is that there, especially if we take care of it soon and it's taken place in the last 60 days, there are some options there. And then the other key piece, question that might come up, and I think we're going to address that in a bit, is just qualified charitable distributions. You can still give directly from an IRA to a charity. It's just no longer going to be required. It's not going to be taxable, but it's not going to be as desirable just because of the RMDs aren't going to be required this year. So some 2020 retirement planning ideas that may make sense is Roth conversions are still going to make sense, both because of the down market as well as if you're in that spot where you were taking RMDs, that's not going to be required this year. So that's going to be another reason why a Roth conversion could potentially make sense for you. So that is going to be kind of a key piece to consider. The other idea, obviously, as we talked about, is that $100,000 distribution from your IRA, suspending your RMD where it's not needed. And then potentially, as we've already talked about, kind of that Roth conversion piece. So those are a few key pieces to keep in mind, and we'll help kind of walk through what makes sense for you individually. But those are a few high-level ideas just to make sure you understand and are aware of. And this piece we already talked about a little bit higher level, so I'm gonna move through this. But if there's some points that are interesting to you, one provision in particular I will highlight is just that there is a $300 above the line charitable deduction for those that don't itemize. So for a lot of you, we've been saying that itemizing doesn't make sense, and we've been looking at donor advised funds and other ways to bunch charitable giving. But just a $300 outright cash contribution this year is going to be an above-the-line charitable deduction. So that's just a key piece to keep in mind. Another provision is just they have expanded your ability to use HSAs and FSAs to cover over-the-counter sales. And this is really to help with quarantine and social distancing. So the new allowance is pretty broad. So if you do have an HSA or FSA, you're allowed to use that significantly more freely for over-the-counter sales. So that's another piece just to understand. And they have also expanded some Medicaid and Medicare pieces. So those are just a few additional provisions that may make sense to keep in mind for you. So again, just to review this on the charitable giving side, that $300 above the line deduction that cannot be used to donate to a donor advised fund. So just want to make sure you understand that piece. And another piece on the charitable giving is 100% of your AGI limit for cash contributions to public and private charities in 2020. This is typically 60%. So this isn't going to apply to a lot of you, but just knowing that that is out there. Another key piece here is just how we look at federal student loans. So this is something that we've also been closely following. And those loan payments have been suspended until September 30th. So that's something just to keep in mind. There's a few other nuances specifically on the student loan side that could make sense. So for those of you who do have student loans, please make sure you talk with us about that. But just knowing that those payments have been suspended and understanding that key piece. And then just some additional provisions for mortgages. So you are able to, for no penalty fee or interest, you are able to suspend your mortgage payment. So that's just another option. Again, with all of these pieces really designed to help keep families in a good situation and to kind of, as my dad said, keep things more in suspended animation until more comes out specifically on vaccines for the coronavirus. For those small businesses, again, we've covered this in quite a bit of detail, but really keeping the long-term in sight and taking advantage of the pieces that are available and really making sure that you get in line very quickly for those SBA loans. We're going to just kind of skip through that. Key pieces for individuals, though, those planning opportunities that we really want to make sure we review just one more time so that you really understand and have clarity over what is available to you. And I'm going to turn it back over to Bob to really go through some of those key pieces and just a little bit of review from last week, but we feel like, mentioning it again is worth it right now to just help you remember and take advantage of those pieces where you can.
Thanks, Carrie. There's a lot there, and I thought you did a great job of summarizing the key pieces. On the opportunities, these are all things that we are going to be talking about in planning meetings with you. So we will be proactive on these things as well, but we just want to kind of give you an overview of the things we are looking at in your planning. And probably, as Carrie said, this is review, but the big thing that really came out from the CARE Act that complements some of those ideas was the suspension of the required minimum distributions, often called RMDs. And that ties right in with Roth conversions, because that's going to allow people that were taking RMDs at retirement time the opportunity to take a look back and say, does a Roth conversion make sense for me? Because in the past, it probably didn't, because what we realize that when you do a Roth conversion, the money you take out of your traditional IRA is taxable income, and you need to pay tax on it in that year. So if you're taking a big RMD out or an RMD out, it puts you already in a fairly high tax bracket. So when you add that to the traditional IRA that you're taking out to convert to a Roth, it becomes a fairly expensive proposition because those traditional IRAs are taxed in a fairly high bracket because they're added on top of your other income. But now what this allows you to do is suspend the required minimum distribution for 2020, and that lets you control the income. And that way it may make sense to do a Roth because we're taking the money out in a lower tax bracket. And as we convert then, as you know, the advantage of a Roth is then going ahead, the money comes out tax-free. And it also has some benefits as it goes to your estate, the Roth does versus the traditional. And the other thing, there's no guarantees on this, obviously, but, we're accumulating fairly good federal deficit right now. So it would not be surprising if 4 or 5 years down the road, we're in higher tax brackets as a way to kind of to lower the debt. And if that would be the case, then having money coming out of your Roth tax-free would make some sense. So we'll definitely be talking about that in our planning meetings because the suspension of the RMD helps in that planning. The other things we talked about last week are just things that we are going to review real quickly, but looking for tax law harvesting opportunities as well as transitioning portfolios because the account values are down. Both the gifting for your individual gifting, but also for charitable giving. You know, the idea is you gift now and use that whether it be the $15,000 that you can give to somebody other than your spouse, and then as those dollars get larger, you'll effectively given a larger gift. So that $15,000 may become a $20,000 if the account values come back. Also, refinancing opportunities. We talked about that last week as well. Rates are down, so it's probably a good opportunity if you have a mortgage to take a look at refinancing it. And then we talked about Social Security planning and the things you can do there. It may make sense to turn Social Security on earlier than planned, just simply to let your other dollars grow back and use your Social Security for income. So those are things that we talked about last time. But the big addition this year was really just the suspension of the RMDs, which for a lot of you may be an opportunity to do some planning around that idea. So I think that kind of covers that, Carrie.
Yep.
And I know you wanted to. Very good. Thank you.
Yeah, thank you. So again, just those key pieces, again, we'll be going through those with you in detail, but make sure you take a few minutes to just understand, see if anything makes sense for you. Please reach out to us if you have any questions. Kind of goes without saying, but keep taking care of yourself, doing what you can to keep yourself healthy. We're getting a little bit of nicer weather here in Minnesota, so getting outside is starting to feel a little bit better. And thank you so much for taking the time to listen to this today. And as we've said before, you know, if you know anyone who could use a few reminders or isn't aware of some of these important changes, please feel free to send this along to them or have them reach out to us with any additional questions. There are a lot of provisions and they're coming at us really quickly. So making sure that you're able to stay on top of it and really take advantage of those pieces where they make sense for you is probably more important than ever. And there's a lot, but if we just break it down into some few simple steps and kind of take a step back and just sort of check all those pieces off the list, it becomes a lot easier and allows you to feel a lot more relaxed and confident about what's going on. So again, thanks so much for taking the time today. And we hope you have a great Sunday. Bye-bye.